What's going on, everybody? Welcome to this trade recap. Today I managed to catch about 85 points and 60 points pretty late into the market, but yeah, let's just get straight into it. Okay. So starting on the higher time frame, what do you see here? Coming into the market, I was actually leaning kind of neutral. Why? Because we are currently respecting this 4-hour Fibonacci right here, but we also just tapped into this 4-hour bullish Fibonacci right here, as well as this EOB right here, order block. So I was kind of neutral. I didn't really want to take a trade right away. I kind of just wanted to see what the market would tell me coming into the market. I was, however, using this 30-minute gap right here as my condition. So if we opened up into this, let me just do this. So if we opened higher like this, bang, I would expect price to go down. So this was my condition coming into the market. And I could also have seen something like this and then up to the unfilled 30-minute gap. But I would need a bit more structure. Anyways, let's see what happened coming into the market. So coming into the market, we obviously manipulated down a bunch. So I was just expecting this to be a big manipulation, because what do we also have above? We have London highs, we have TDO, we have Asia highs. Even though they are, they are supported by Fibonacci gaps and stuff like that, I will still see it run all those highs. And we're also pretty overextended in my opinion. Actually in this leg we're kind of underextended. So yeah, let me just give you my thought process real quick. So at this point in time I was looking at this 5-minute Fibonacci right here. Took it inverse, and I would have taken a position if we closed within this candle at least. But as you can see, we first closed right here, and then I guess I could have like lowered my stop loss, so I would have gotten a better risk to reward, but I was just not willing to accept that. So for me to get a positive risk to reward, I would have to aim for like right here, and with the 144 point stop loss, that just didn't make any sense to me. So I faded this 5-minute, and that's the reason why. Anyways, let's see what happens here. So at 10 AM right here, you can see that we kind of start accumulating a bit right here. I then anticipate price to manipulate into this 30-minute unmitigated gap, which is also now a 1-hour unmitigated gap. And then I was thinking about taking a MAC model, which I also did. As you can see, kind of just chopping around, generating some liquidity here at the lows, which is positive. And let me just go over this trade real quick, because there was a guy in my Discord asking why I didn't take this trade right here. Well, first of all, this iFVG is just not valid. It's way too small. And we did get a CISD and I kind of tapered it in a way. But the main reason I faded this is because at the time, at this point in time, it's 10:14. So what happens in 1 minute from here on now, or what it's called? Well, we are going to open up a 15-minute candle. And what do I want to see the 15-minute candle do? I want to see a wick on the 15-minute candle. So I was expecting price to open up this 15-minute candle, maybe get a remanipulation, which isn't kind of needed, and then distribute lower towards our generated liquidity down here, as well as this 5-minute unfilled and EQ of this range, which was primarily my target. So let's see what happens here. We fail to manipulate these highs again. We just generate some more liquidity right here. But if we take a look at ES, you can see that Yeah, over here you can see that ES did the manipulation. ES manipulated these highs again, putting in this internal SMT right here, which is super valid for me. So now I would be interested in taking a trade out of this iFVG right here, and the closure below the 10 AM price was also what I was looking for. So as you can see, we got the closure right here. I took my trade, put my stop at this high right here, and I targeted this low right here, just right above EQ of this range. And yeah, so it kind of just started chopping around. I was actually thinking about waiting for the CISD before entering the trade today, just because it was kind of choppy. But yeah, I just took it on the iFVG anyways. But I know a CISD was needed for us to go to my take profit. Also, what was the drawn liquidity? Because I already told you that EQ of the range was the lower time frame drawn liquidity and stuff like that. But also, we have agreed upon DOL over here on ES. You can see that we have this 50-minute gap, which, if we are going to be bullish anyways, we are going to mitigate this 50-minute gap and then proceed higher. So I was pretty confident in that. And as you can see right here, at this point in time I went break even because ES touched this 50-minute gap, and we hit my TP1, left a runner for the external liquidity down here just in case we were going to be bearish on the day. And I trailed my stop, I trailed my stop right here. My stop loss was now at this high. I then trailed my stop loss here, and bang, it got hit. So we got a solid 1.99 and a 1.44, which is kind of solid in my opinion. Now, would there be any questions about this trade I could answer? No, not really. I mean, this is just very time-based trade in my opinion. Usually I don't really like to take make models. I would rather take a continuation, and as you can see, I'm pretty sure it's also working out. Yeah, a continuation is also working out right now, it seems like. But just, I mean, this just looked kind of textbook to me. We tap into the 1 hour gap, get a SMT at the high, meaning now our stop loss is protected, very protected. So yeah, that's basically the thought process behind this trade. So the only thing that kind of bugged me out a bit on this trade was probably because ES was looking way more bullish. So, but I mean, as I mentioned, it was a MEG model. We need a retrace at some point into a higher time frame for value gap. So yeah, that'll pretty much be it, I guess, for the video. Yeah, keep it short and simple. Anyways, I'll see you in the next one. Bye.